Good afternoon, everyone. Welcome to the afternoon session of the Live Trader stream. It is 2:30 Eastern Time. Usually I start back up at about 1:30, but I did not do that today. The index futures have been very difficult to trade today. After the CPI number came out and they made their big trade down before the market opened, and then after the market opened, made their big trade up. It's been very choppy. Um, Basically, I have the average true range indicator here at the bottom of my chart. When average true range is on the decline, the more difficult it is to trade. The choppier it is, the smaller the amplitude of the price action, the tighter it is, the more whipsawed action you see. And when I say whipsawed, I mean, looks like the momentum is down, you open up a short position, and then as soon as you do, it just rips against you in the other direction. That's what I mean by getting whipsawed in these trades. Now, right now, the NASDAQ is making a decided move to the downside, and I happened to catch this one the right way, which is good because I had some profits I was sitting on and trading the NASDAQ futures that a couple of badly placed trades sort of took away from me. So now I think I'm in a, at least for now, it looks like I'm in kind of a sustained downward momentum run, for lack of a better way to put it. And I just got to pick my spot to the downside where I want to take my profits, because when you get whipsawed like that, you become very wary, and you want to protect your profits, and you don't want to suffer any more trauma than you need to when you just get beaten up when these things go in the wrong direction. All right, well, didn't take as much of those profits as I would have liked to, but I at least got myself in a better spot. And really what I'm trying to do is I'm trying to defend the profits that I have. I'm treating the futures as a hedge because I'm sitting on a nice gain in Apple right now. Facebook is really not doing anything one way or the other for me. I mean, the stock itself is up $5, $5.39 right now. But I had a put spread that I bought because I was bearish on Facebook, and then an analyst came out this morning and said that he was doubling down on Facebook and raising the price target up to 240, and Facebook's been rallying all day. So kind of in the middle of that rally, I sold my short put, or I bought my short put back, and I sold a higher strike put to collect more premium and to basically turn this position from being long premium to being short premium. So I'm a net seller of premium in this case. Which basically means, when you do that, when you sell a put spread, that's a bullish position. When you buy a put spread, it's bearish. So Facebook hasn't really been doing anything one way or the other. We're seeing now the NASDAQ catch a little bit of a bid, NASDAQ futures, and that's helping your Apple, my Apple. It's helping Autodesk, Autodesk has been just a whipsawed, choppy, just a mess. And I should probably, I'll take a look at the chart on it. I might just get rid of it altogether today and just not even deal with it. So that downdraft in the NASDAQ was nice while it lasted. But see what I mean? Average true range started up, started to creep its way up, and then the bulls stepped in and started buying this thing back up. So anybody who was in that trade that was not on top of things could have gotten hurt. And I don't think I traded that as well as I could have, because I gave back about 30% of the profit I was sitting on at the time. But you have to become okay with that. I mean, if you strive to get perfect execution, you're going to be disappointed. It's been one heck of a choppy day. I want to take a look at the chart of each of these indices and figure out. I know the Dow has traded through its open a couple of times. All right, no point waiting for that. So the Dow opened here. Oh, I'm sorry. Open there, has traded back and forth through its open a couple of times, and it's just been, you know, pretty bullish ever since. Same with the NASDAQ, but it hasn't traded back and forth through its open the way that the Dow did. Nor the Russell. Nor the S&P. So despite concerns about inflation, because the CPI number came out, like I said earlier, it came out a little bit hotter than expected. The consensus view for core inflation, which is CPI minus food and energy, was 1.7. It came in at 1.9. And then the CPI year over year was, consensus was 1.9. It came in at 2.1. Now I read a headline, and I probably won't be able to find it, but I read a headline that basically saying, you know, because part of the inflation was in apparel, and the basically the headline was saying inflation in apparel is not, either like over the long term, is not really going to contribute to inflation. Okay, so I guess I'm wondering, like, do you really believe that, or are you making that argument because you want to support the bull case that this market should keep going up? Because as soon as the number comes out, the spin doctors emerge. You know, those hired by the bears and those hired by the bulls. And I'm being facetious, of course. But everyone's coming out explaining why this number is either good news or bad news for stocks, depending on whether you're long or short. So anytime anybody tells you, you know, an opinion on a stock, well, I'm bearish on the Dow. All right, are you short the Dow right now? If they say no, and if you believe them, then okay, maybe I might listen to you. If they say yes, well, then I'm not going to listen to you. Because I don't know what research you've done. I don't know how much thought you put into it. I don't know how rigorous you are. Volume today has been above average. And what's interesting is lately, and when I say lately, I'm talking like since the correction started on the 26th, increases in volume have been red, with this exception here, and green bars, decreases in volume, have been green. So bullish price action on declining volume is not necessarily something that you want to see. Now, the volume being put in today is a little bit more encouraging if you're a bull, because now we're showing higher volume. The volume on The 9th was 776,000 contracts. This is just the futures, right? The NASDAQ futures. And then the next day was like 403,000, so almost half. Then 379, so less than that. Today is 409, so if today could, I mean, today's already beat this 403. I don't think it's going to get up to 776. I mean, it might, but, you know, a nice good spike in volume, I think, would be short-term bullish for these indices. And if you look at the Dow, it's the same thing, right? The Dow, and it's even more pronounced here. You know, increases in volume have been red bars, decreases in volume have been green bars. You know, today is, you know, the volume on the Dow, mini Dow, is just like the volume on the rather the NASDAQ, and on the mini S&P, you know, red bar increases are red bar are red. You know, increases are red, decreases are green. Today, yesterday's volume was 1.43. Today's volume is 1.63. So today is a little bit more than yesterday. It's got a ways to go. It's got about another 500,000 before it beats, or maybe 600,000 before it beats 2 days ago, Monday's volume. Now, volume on the index itself, less than average. So there's more going on in the futures from the standpoint of average volume, that's what this yellow line here is. That's the average volume. Average volume for the Dow is 416 million shares. Today, 288 have changed hands. I'm marking that because that's the range that the NASDAQ futures are kind of stuck in right now. I don't like that color. Let's pick a color that's a little bit easier on the eyes. a little bit better. So if I am a believer in Fibonacci retracements, which I am to a point, what this tells me is that that's about the level Apple's going to trade to before it could potentially retrace, or before this retracement it's on right now could end. Now, this chart was drawn before this bottom at 162.88. I'm sorry, not 162.88, 150.24. Which is actually going to bring the level of retracement down to about 168.73. So I'm thinking, because these options expire Friday, it's time to close. That's right. Take the money and run. It wasn't a huge profit, but it was a profit. And I can look at playing, something with a little bit more time to it. Autodesk, on the other hand, I think I like to see what it can do. just set a new high. For the day. And nothing more discouraging than being right and having it just deflate. You got to be quick on the draw if you're going to scalp these futures. Autodesk is catching a bid now, along with everything else. It's only down 17 cents. At 109.62. It was as low as, well, I can't even read what that is, 107.44. So it was down 2 and change. Facebook, pushing new highs. Wow, and look where the index is, or I shouldn't say that. The NASDAQ futures, you know, they broke out of this range, and I caught some of that move. So now, if it comes back, you could play a bounce to the long side, assuming it stays above. In case you missed it. Seeing us looking like we may get that. Because we're topping out here. You know, bears are pushing NASDAQ futures down. Stochastics are trading down out of overbought territory, making a rush to the downside. But this is what's troubling. So we had both stochastics trade up into overbought and trade down. If my philosophy on this is correct, I don't know if we call it philosophy or whatever, but if the way I trade this is correct, the slower stochastic is going to want to go down. And so your faster one is traded back up here, and if it continues up here, then it's gradually going to make it back up across. But I don't think this is going to sustain. So really the next, if there's nothing, let's look at the 1 hour chart. All right, if there's nothing keeping these stochastics up above 80, which there could be arguably, this is still bullish. That's your answer right there. Okay. So from the standpoint of the 1 hour, the 4 hour chart, it was looking like, okay, it's an overbought territory. Is this going to continue to, is this going to continue to melt up? Probably, yeah. This is what's going to keep upward momentum going. This push up here. Now on the weekly chart, we got, this is telling us a different story. As is the monthly. So crude's back above 60. So the fact that the bill, or yeah, the inventory build came in lighter than expected has been bullish for oil today. Gold's back above 2%. Japanese yen is up 55 basis points. It's pretty much been that way all day. It hasn't really deviated much from that level. As far as the rally is concerned, consumer staples are basically flat. That's, your soup and your soap and stuff like that. Telecommunication, utilities, and real estate are not participating in this rally. Financials are. They're leading it. Information technology and healthcare. Consumer discretionary. So basically, your secular movers. Or not your cyclical, movers. The Russell, the NASDAQ 100, and the NASDAQ Composite are leading this rally. So right now it looks like, as far as if you're waiting for a pullback, right around your 3-period moving average. Actually 4-period moving average if you want to be precise. Got about 35 minutes to go in the session. I think I'm going to take gains here since this expires on Friday. You know, this one that doesn't expire till March, and kind of let that go, you know. So now the mini NAS futures have lost support at the 3-period MA and are sort of finding it at the 9-period here. But I don't know that all is well. That's a drag on momentum. This is all looking bearish. Downward slope, downward slope, upward slope, but we're still below the 0 line, right? So it could always reverse, which it's doing right now. This is sloping downwards. So if NASDAQ futures trade back down into this range, which is what it looks like it's trying to do, These bulls are relentless. The bears are fighting back. We get a close in about 40 seconds. If it closes below this trend line, then it's looking pretty good to trade back down into range. See, the market can never just give you anything, right? It couldn't close below. It give confirmation. It has to close above. Keep you guessing. I mean, the only thing that we do have is, okay, we've got a stochastic crossover here, but we've got it on kind of elevated stochastics here, like this. Not elevated so much as like hiding tightly together, I guess is actually what I mean. The fact that this 3 period has crossed below this 9 period is a pretty good signal. Although there have also been areas where it wasn't really that strong of a signal. Like where it crossed over here, I mean, this was a good price run up, but then it never really it didn't really get that extended. And these averages have been really tight as this has melted up. What you want to see is you want to see your faster averages moving away in that direction from the slower averages. That's what you want to see. Now we're starting to see it break down again. In about 1 minute 15 seconds, the 15-minute bar closes. We'll get confirmation on whether that's a crossover. We saw a crossover here. It started to reverse itself, so it was kind of dicey. We're seeing it here and here. We're starting to see selling strengthen even more now as we approach the quarter till time frame. "15 seconds, and the selling is continuing. And bar just closed. We got confirmation that that was indeed a bearish stochastic crossover. However, we have this here, so there's going to be some buying before this is a short. And it's the last 15 minutes of the trading day, so trade at your own risk. So now we have this line is resistance, this line is resistance. You know, it was support, this line here was support, now it's resistance. This line was resistance. You know, it's still serving as resistance. It's not doing a very good job at the moment. I mean, this market is getting bought right back up again. Hopefully you can understand why I don't trust this move. I'd rather just kind of keep my powder dry and watch this play out. With this push late in the day, my suspicion is that this will be very weak overnight. Quite a bit of uptick in volume. See, every time it stretches up like that, it gets sold. So this could be longs taking profits. If we break below this moving average here, we got pretty much straight path down, not really any obstacles, any sort of congestion to get in the way. Same here. Oh, I'm not even showing you on the. So it's a long way to drop. As is this, as is this. 30 seconds to go in this regular session. Five, four, three, two, one. Ding, ding, ding. Trading day is over, at least from the standpoint of the cash markets. We'll let these indices settle out. Let the final trades clear. But it's looking like it's a day that defied expectations. The CPI number came in, and I've said this multiple times today, came in higher than expected, and the markets declined. The futures sold off before the market opened, and then just shrugged it off the whole day and never even looked back. So that doubtless will be the talk on a lot of shows tonight, you know, CNBC and Bloomberg and Fox News and everything else. So the Dow closed up 255 points, a little bit above 1%. NASDAQ 100 up 121 points. It's 1.85%. The composite up 130 points, 1.86%. S&P up 35, almost 36 points, it's a 1.35% gain. And the Russell in third place, 1.82%, up 27 points. 10-year index was up. So that yields are down, but the futures on the 10-year note were down. Yields up. VIX was down 23%. VIX futures were down almost 10%. So the volatility that we expected from the fact that today was expiration day on the VIX, any VIX options, wasn't that noticeable, if you ask me. I mean, sure, there was volatility, but no more so than I would have expected. There was a lot of price moves, you know, reversals that kind of caught me off guard. But nothing I haven't seen before, so. So I'm going to take the time, take the night, and digest this move and figure out, you know, the great mystery for me is what was it about that CPI number that was good news? Where is the silver lining? Where are traders finding that silver lining? Is it the fact that that a lot of the move came from apparel, and that's, you know, that's not really like clothing inflation isn't really inflation? Like, you know, is that it? I don't know. You know, are we going to come up with a CPI number that's X energy and food and clothing? Is that what's next? I don't know. So, with that said, I will go ahead and bid you a farewell until tomorrow morning. All right, have a great night, everyone.